So
Was that an earnings bet?
yeah, so there were four separate trades for QCOM, right? So we took the straddle, right, uh, yesterday, and let me just show you the back test for QCOM, right? It was extremely positive, right? But there's kind of like an outlier where it's only worked recently, right? And this time around, it just didn't work. Like according to the back test, like yeah, it has a positive win rate and high expectancy, but in something in comparison to like IBM, for the last like 10 years almost, like just a steady uptrend of the straddle working, right? It has much better risk reward in this sense, rather than where like QCOM it worked early on into 2015, didn't really do anything, and then recently changed their business model, so like their earnings have been a lot more volatile, right?
Hmm. Do you know what they changed in their business model? Like what exactly was the change?
I don't know exactly, but I think they started to become more of a profitable company around this time.
I'm pretty sure they changed it to be more accommodating for COVID. You can see it because it's the past few quarters.
Yeah,
It's to become more accommodating, and through that it changed everything else. But I could be wrong about that. Don't quote me on that.
yeah. I'm not sure, but you could see the difference though, right, between IBM and like something like QCOM, right?
Yeah, yeah.
So with the straddle, right, my execution was actually first. Let me go over the initial trades first, so the straddle would make a little bit more sense, right? So the first trade I took, right, was this 415 breakout. The pre-market looked super nice. Like we were holding this level. It looked like it was ready to go to 416, 417. So I just slapped on 1,000 shares at this 415, right, when it confirmed. But I've never seen a quicker stuff than this. Like I couldn't even react fast enough where I just ate a full 1 hour loss. Like I was trying to risk $500, but I took way more off the table because it was just happened so quick that they just completely stuffed the ask and everyone hit the bid, and we got this really big capitulation move downward, right?
So you had an orb of pre-market highs. Was that your buy?
Well, it was not really open range breakout per se. Let me pull up a chart for
It's more like a sneak entry for a pre-market level.
no, it's like this is a good level to risk off. Like you buy this 145, right? We have room to this channel right here, 146, and then this pivot 147, right? And then you risk just like this pivot 50 cents. Like under here was my stop loss, like right here, like 144.30 ish. So I was gonna risk like 500, 500, $600 on this trade, right? But then we just completely got stuffed, and then we traded right to this support area at 142, right?
Yeah, I see that.
So then I took a second trade, full size, right? Where I bought the bounce here. We got that classic break below the level, rebid. Okay, get long, risk low a day. You control your risk so much in this trade, right? So slap on 1,000 shares, cover half into 143, $1, right? Sell some into strength here. And this is the point where Q started to be very weak for some reason. And SPY as well. We started to get flow into the SPYs, like these long dated, out of the money puts, right? But really high premium, right? So that kind of spooked me out. I got stopped out on my runners right here, 143.50, and then obviously traded downward. But when I got stopped out here and I noticed the Qs and everything trading down, I'm like, okay, under this 142 support, we have this whole gap to fill to the downside. So I said, I'm going to risk this 142, 50 cents on the trade, and I'm going to short it, right?
Yeah.
So third trade. Now keep in mind, this is the third trade, and we still have the straddle on. I didn't touch the straddle yet. So like my mind's all over the place.
Yeah.
So we short that 142, completely get stuffed, bought back up, and the trade wasn't working, so I just stopped out here. Small like $200 loss, right? I think I was risking $500, so this is like half half an hour basically. But then what pisses me off the most is that I had orders over here to get filled because the trade wasn't really working, right? And they skipped my fill by like literally a cent, you know?
To cover your short.
Yeah, to cover my short. I was gonna buy back 140, 150. I never got filled. I think it was literally 1 cent off.
Yeah, and then they whip you out.
Yeah, and then I got stopped. I'm like, all right, whatever. You know, but it ended up going
The
to
only
my
thing I will
target
say
right
is
here.
don't pay attention too much on gaps. Like gaps don't really like that earnings. It doesn't really mean shit. Yeah, we've seen it get filled a bunch of times, but
Yeah.
like just because something is trading above or below a previous price doesn't mean it needs to go retest that price ever, especially on good earnings. Like let's say QCOM
Unless
good
it's like
earnings.
a super big support or something.
Yeah. Well,
yeah. I mean, if you're approaching it, I would take a bounce there, but I wouldn't just be like, I'm gonna fucking short this thing under lows because it has this gap. You know what I mean? Like, yes,
Yeah.
Qs are falling, but you're now shorting a strong stock. You know what I'm saying? You're shorting something that's green as fuck on the day off earnings, and you're
That's
just
also outside
anticipating.
trade criteria. You're sticking to trade criteria.
yeah, like
Yeah,
I'm just
exactly.
taking
Like, I don't
too
have a
many trades
playbook
here.
of gap fill, low of day gap fill. Like
Yeah,
it's
the
not-
thing is, it wasn't really like gap fill. I guess I was just trying to trade this channel right here, right? This 142 breakdown and then cover into here. This 141.50 right here. Like I was trying to get that cash flow to make up for this shitty trade that I made up here. And also keep
I
in
see
mind,
your
I
thought
am
process.
yeah.
I see your thought process. For me, the only thing that would have stopped me is that we had the 20 days, and on a super strong stock, the 20 days on the 1 hour usually acts as a first really strong support. I mean, we saw that fail today with what Apple, Facebook. Well, actually,
Yeah,
Facebook
the
never
20
tested
days,
the
right?
20.
So it's not a bad idea to short the support here
But the thing is,
and then cover here.
look, Facebook never touched the 20 days. Amazon is trying to hold on to the 20 days. It might break it right now. And then what other strong stock had earnings? Like you just comparatively. Google, same shit, never broke the 20 days. So now we're looking at all the strong stocks that had good earnings. None of them broke the 20 days. You know what I'm saying? Besides Amazon, who's speculative, which hasn't happened yet. But like Facebook, which had good earnings, and QCOM, which had good earnings, haven't broken that 20. You know what I mean? Like me personally, when I see things confirm to the upside, the 20-day is like my bounce spot. Like that's like, especially if things confirm and sell off. That's like one of my prime like playbook bounces. Like confirm, sell off to the 20 is a decent bounce spot usually on the 1 hour. So that would be my only thing, like kind of deterring you short, because that play all of a sudden became like a nice, highs breakout to like a B short. You know what I mean? Because you're shorting what 142. Or what did you short? 142 and a half?
Basically 142.
So let's say 142. Now what, your MP in this first candle is 141.4? You know what I'm saying? So
The risk
you're
reward
shorting
doesn't
big.
make sense because I was risking
you're
50
shorting
cents.
big,
here.
you're shorting big on a $1 move, so it's like, I would not have taken that personally. You know what I mean?
It would just be better to buy into here.
Exactly. That
Yeah.
would have been buying those things.
I do have a question for you though. On the third trade, right? When you were you were shorting it, right?
Yeah, right here,
Would you-
142.
If you didn't take any of the trades before, would you have taken that trade?
The thing is, I don't know. Okay, you see, you guys are gonna see with the SMB video that's coming out, right? We recorded it yesterday. We were talking about how to add other trades to this straddle play to cover some of the risk in the straddle. So for example, right, with IBM, there were tons of areas for me to get long and get quick cash flow trades to cover the losses of the puts, basically. And that's what I was kind of trying to do with this trade, right? So what happened was with the straddle, I was fucking massive size here. This is like 18K position, right? And I'm basically risking around 15% on the whole position, and just my execution was so bad that it was more than a 1 hour loss, right? But basically what I did was we had that really big capitulation down. I sold the puts at a fucking awesome price, like literally 150, 160. I got my puts out, and right now let's see what they're trading at. They're probably trading for much less right now. Let me just load up my TOS.
I don't know what's happening, but Dish is fucking popping off. They have a comment from Chairman Amazon. What is this? Will be the company's largest customer on the network, so Amazon's going to be a Dish customer.
Yeah, so right now the puts are trading at 130. So I got an amazing fill right here on this big capitulation because everyone was hitting the bids here, and I was able to offer out a really good price for my puts, right? But for the calls, right? In hindsight, like, yeah, just sell up here, right? But I was really looking for a reason to sell these long calls, right? So I got stopped out of the calls on the straddle right here when we broke low of the day because my thesis was, okay, Qs and SPY look really weak. It's probably going to fill the gap down. Like the names that had earnings, Facebook, looked particularly weak. So I said, you know what? If this breaks this 142, that's it. I'm out of the calls. It's probably going to not fill the gap here, but we at least test the 20-day at 141-ish, which we pretty much did, right? So would that be like bad thinking to stop out right here on these long calls? I mean, we have May 14th expiration on these. Like I could have easily held it, but I mean, I was just following my rules, I guess, because
It's a good, yeah. If you follow your rules, then it's a good idea to like, because if you know that it's that like if you can see this like SPY and Q is going through a downtrend, you can see that the QCOM is going to follow. Then like it's not a bad idea to exit and then get a better price to hold until you wanted to originally. You know what I mean? It's not a
yeah,
bad idea. It's like not uncommon either. You know, like if you want to just like take your profits off the table and then kind of average down without having a position you at, like, and just kind of bring the cost of the total cost of the trade down. Like that's completely fine. You know, if you still like the idea and you still think that it could be successful.
yeah.
You
No,
know?
you're 100% right, and I guess we have to see how this QCOM develops. But with IBM, I ran my stop literally above this opening print here at 136, right? And then I sold up here. With UPS, right? Another straddle that we took. That in hindsight, obviously, we kind of sold early. I sold at 136 right here, right? When we got that quick pop, I was fully out of the position, right? But just looking right now, UPS, there was never a real reason to sell. Like, we never got below the opening print on earnings. We held this 193.50-ish area for support, never broke the 20 days, and now they're trading at 202. Like, this is a massive trend day for UPS, right? And when we have literally 175 calls, right? I can't even imagine how much money I left on the table by just not using a reason to sell. You know? That's something I really have to work on with these straddle plays. And the same thing with QCOM, right? Was it a good idea to stop out here? Or did we just fall into a bounce area for the SPYs and Qs? Like, we fell into the 10-day, now we're going to trade higher. Like, I'm not sure. With IBM, I had a really good exit, right? I exited when we hit the price target 145. I don't know what the hell this wick is. I think there was some news, but like we just have to see how this QCOM develops, but that's just my thought process on it. And another thing that pissed me off too was the Snapchat idea, right? I posted the idea of getting long here, and I was just so focused on QCOM that I completely missed this, where it traded exactly to the pivot point and the Bolly band, where you could have just made great cash flow, put on 1,000 shares, you're risking 20 cents, and it just never tested below that. Like you'd get long into here on that opening range break, right?
Contracts moved about almost 50% on that move as well. If you got perfect entry.
Yeah, I was gonna trade shares, but
Yeah, mine's 48%.
would you trade weeklies or next week?
Yeah, snap.
You see, like the one, you would get the weeklies, right? $1 move, you would probably just get a delta off those contracts, which is not bad, you know.
I took a 50-cent move just because it was slowing down.
Did you take did you take it at the beginning of the day or like when it broke 63 the second time?
63 second time.
Okay. I
Or no,
took a
first
little bit of
time,
that run
first
up
time.
too. I took a little bit of the run up on the second time off that, not off the bounce, but when it crossed over some of the moving averages, I entered for a quick little scalp.
Mm-hmm.
Nice.
So what are you guys' thoughts with the straddle play that we're trying to like not master but improve, right? Like would you end up taking a trade like this QCOM? Is it completely hindsight that I'm looking at this, that it didn't work out because the last 3 quarters were outliers in this data set?
You can also see that like those last 3 quarters could be like you can look at it both ways. You know, if it went your way, you would have been like, okay, yeah, I'm glad that I took this because the last 3 quarters showed that something was different, something was changing, something was going even better than before. You know what I mean? So like it's really just like you can look at it either way. You can look at it either way with how you with like whether you won or lost. You know, the only real way to tell is to take both of them and then take them both into consideration. You know, you're gonna look at that and be like, wow, like this was great. You know, this had this, and then you're like, oh, this is my new criteria or whatever. Or you could be like, this was an outlier.
So this is literally just a trade that didn't work out. Like the overall market didn't play in our favor. That this was just an unlucky trade with QCOM, basically. Like this was a fine area to get stopped out. Like, yeah. I'm sorry, Beast. What were you saying?
I mean, I'm still holding it. There's a reason why I got more time for this trade.
Yeah.
There's a reason why people play weeklies and why people hold long term. Like Victor played weeklies. People played weeklies on Apple because they want to get out quick. They quit profits, expecting quick cash flow, and I got longer. I got longer on both sides, and and I really like straddles. Am I gonna go as heavy as them as premium cells? Probably not. Probably never. But that time of May 21st gives me time for Qualcomm to play out and either break even or take a small loss on it, due to what's going on in the market. And and yes, the sell off did shake off some people. People messaged me, oh yeah, they did. You know, they don't want. You know, I don't blame them, but there's been a lot of price upgrades on Qualcomm. I've got no reason to sell on my end.
So maybe I'll re-enter this. I really don't want to force so many trades. I mean, I'm down on the day of full stop, but I mean, I guess you are right. Like it just did shake out hands, and look, it's holding this gap now. It's holding this Bollinger Band. So maybe we re-enter this. I don't know, but
And that's up to you. That's up. Nobody's telling you that you have to re-enter.
yeah,
But what I'm telling you is not to overtrade. Not to overtrade. That will. I've seen people overtrade. It's not good.
yeah.
You know,
So-
it takes a different type of mentality.
So would you consider this over trading here? Like, pretty much
Hold on,
ate a full
It depends
R.
how you define overtrade. But for me, overtrading is like 6 trades in a day. That's overtrading. Anywhere more than 5, I need to leave the room.
Mm-hmm.
Loss or win. But if on the straddle plays, if you're wanting to see the greatest results, and make money off it right away, get the weeklies or the next week straddles.
And just literally just take profit at the open here. I think you would be
Yeah,
pretty much up right here. Like you just hit the bid when we open up, and that's it. That's your trade right there. That's not a bad idea either.
I also think there's just a hint of revenge shitting in that last one. But
What shorting
was
the
like-
lower
oh,
day
yeah.
right here?
it was like borderline. Like I feel like the reason why I asked you before if you would have taken that if you didn't take the other ones is because like it doesn't seem like the kind of trade that you specifically normally take. You know, it doesn't seem like the kind of trade that like almost midway through the day you're like, oh wow, I want to short this right here. I want to do this. I want to do that. You know, like that. I feel like
Yeah.
you get more into your own strategies, and you start like kind of exhausting your resources in like the way you trade. Like when you're revenge trading, you know, you do a lot of things that are out of your style, a lot of things that you're not completely comfortable with per se. You know what I mean?
Yeah.
And that last trade is like, I wouldn't say that it's like that it's a bad idea because it's not a bad idea, but you wouldn't. I don't think you would have taken it if you didn't lose earlier in the day. So,
Yeah. Yeah.
you
No.
know, like,
100%.
something to keep in mind that it's like you have to remember the motivations behind your trade, which is a big part of psych. You know.
Yeah, no, 100%. Because
Oh.
I guess the reason why I was putting on so many trades, right, was because when we went over the playbook, and we're gonna like probably, I think they're gonna upload the video this Saturday, right? But when we were talking to Seth, and specifically this IBM, right, we were just talking about ways, like there were so many different ways to add cash flow to this straddle, right? So say like right here, you could take this 140 opening break, right, for cash flow. Right here, you could add on the bounces when it's holding here. You know, like there's tons of areas that I could have limited some of the risk on IBM when the trade was working, right? So I guess I was trying to do that with Qualcomm, just way too much in a short period of time. Like I took 1, 2, 3 trades in the span of an hour. But yeah.
Guys, Dish is doing the thing. I yelled it.
Okay, hold on 1 second. Yeah, the video is kind of
It's
long.
alright.
So.
It's fine. It might break highs right now. I took a small position, holding a small runner.
Are you in equity?
Yeah, equity. This is I'm not. I
Yeah,
don't.
I'll wrap it up.